All right, we are live. Today we have got two travelers on the podcast. So myself, Fredrik Sandvall, and we also got Bobby Casey here. He is actually not only traveling, he is also helping people to understand why traveling makes sense. So, tax lawyer, you have more air miles than the average person. How did we end up on this podcast, and who do you normally help? Normally,
Well, first question, how did we end up on this podcast? Honestly, I don't really know that.
same.
I think my PR person reached out to
Yeah,
your
yeah,
team somehow or another, and there was
exactly,
some conversation, and they said, let's get Bobby on the show. So
exactly.
that's pretty much all I know is I somehow got booked on your show, and I'm like, well, okay, this is on my calendar, so let's
Let's
do
do
this.
it. Exactly. All right. So
Um,
we got a hard stop here for you in the audience. So trust me, this will be less than 1 hour because both have got other things to do. Let's share as much as we can to give you some thoughts. And I hope that we will cover, for example, why you can consider your personal tax residency, depending on where you live in the world, where you might think about your company setup, and maybe even touch upon where do you want to die. I have no idea where if we will cover that, but let's jump in. Uh, People who scroll on any of the social media see that people seems to be traveling all over the world. Everyone seems to have fantastic amount of money, and most people are billionaires or on the way to become billionaires. Uh, that's if you look on social media. So therefore,
Absolutely.
how does a serious entrepreneur really design a business life with more freedom? That's like the clickbait for everything out there. But you actually work with that in real life, and you have real people who travel and earn real money. So let's jump in. Uh, why does where you live make sense and matter?
Yeah, so I like your point, the clickbaity stuff, like
Yeah,
see the Instagram reel of, the beautiful person sitting on the beach with the laptop. I love that image. It's so stupid, but I love it because it just gives the absolute wrong image. That is
yeah,
not what real people do. That's literally for nothing. What I love about that the most is if you've ever done it, if you've ever tried to sit on the beach with your laptop, you can't see the screen.
no,
Like the glare
and you
from the
get
sun, you
sand
can't even see the
everywhere.
screen.
Yes,
It's the dumbest thing ever, but it's all over social media. It's the
yeah,
most stupid thing. But I will say I do. One of my home bases is at the beach
uh,
in Mexico, Playa del Carmen, Mexico. But you'll never catch me in a million years sitting at the pool or sitting on the beach with my laptop. If I'm going to be sitting at the pool, it's not with my laptop. It's not going to happen. But where do you live? Why does where do you live matter? So I think this is a good opener for the difference between physical residency and tax residency.
yeah.
And a lot
Let's
of
go
people
there.
get this. A lot of people get this really, really mixed up. Um, People just think there's residency and physical and tax residency is the same thing. So
Yes.
if I go get residency in, I don't know, pick a place, let's say Portugal, for example. Does that automatically make me a tax resident also? No, not necessarily, depending on the type of visa you get in that particular country.
Yes.
They are two different things. Physical residency is managed by the migration office in that country. And so you have to meet a checklist of requirements where they grant you permission to um, reside in that country for an extended period of time. All physical residency means is you have rights of residency in that country. Has
Yes.
nothing to do with taxation. And actually, taxation is not even managed by the migration office. It's managed by the tax office. Two completely different government offices, and they
Yep.
have a completely different set of rules on what it means to be a tax resident. So, like, you can actually be a physical resident, oftentimes, you can be a physical resident without being a tax resident. And sometimes you can be a tax resident without being a physical resident.
Yes.
So, again, that depends on the country, but we can go through a couple of examples if you'd like. I picked on Portugal in the beginning. I like using Portugal because it depends on how you become a resident of Portugal.
Yes.
So Portugal has, we'll pick a couple of the different options. So there's the D7 visa, which is what non-EU people, well, generally, there's a D7 or a D8, but generally, if you're a non-EU person, in most cases, you're going to go with a D7 or a D8 visa. Well, a D7 visa has a minimum stay requirement of 183 days in the country, which makes you a tax resident. So if you go the D7 route,
Yep.
you become a physical resident, and by default, you will become a tax resident. Whereas a D8 visa, or what they call the digital nomad visa, has no minimum stay requirement. So you could get a D8 visa, which gives you rights to reside in Portugal all year, but it doesn't mean you have to be in Portugal all year or any minimum amount of time. So you may not actually become a tax resident with a D8. And then the other one, which is less common nowadays because they've cracked down on it, but there's the golden visa, which has a minimum stay in Portugal, minimum stay requirement of 60 days. So you could go buy a property that meets the golden visa requirement, and you only need to be in the country 60 days, which doesn't make you a tax resident. But it could make you a tax resident if you fulfilled the tax residency rules. So like that's one example of the variations. Then there's another strategy, which is for the digital nomad crowd. In my opinion, there's kind of two options for you. One of them is a little more challenging.
Yeah.
I mean, let me clarify. There's two options for the digital nomad crowd if you want to really optimize yourself for taxes. Again, any of this becomes a personal preference and a lifestyle choice that you may or may not be comfortable with, right? Like in some cases, maybe you want to live half the year in one country and half the year in another. Well, you're probably going to be a tax resident somewhere, depending on those two countries.
Exactly.
But if you're more nomadic, I think you really have two choices. One is to basically just not be a tax resident anywhere, which is difficult, and there are some. It's possible, but it's difficult, and there are some, let's say, disadvantages or some compromises you got to make if you're going to just not have tax residency. And then the alternative option is to get tax residency in a country that is either a zero tax country or a territorial tax country. Again, that's if you're trying to optimize for taxes. So like an example of that would be, like a very common one nowadays, tons of my clients are doing this, is Paraguay. So Paraguay, you can get physical residency and tax residency. They do have a very nominal minimum stay requirement. It's a couple of days every other year, so it's pretty easy to meet. But you can be a physical resident and a tax resident in Paraguay, but Paraguay is what we call a residency-based territorial tax system. So you only pay tax on the income you earned inside Paraguay. So that's a good option for nomadic people if you want to have tax residency. And the other option, like I said, is just don't have tax residency, but then there's a lot of compromises you got to make there and some challenges. Not impossible, so it depends on the person, but it is a little trickier.
Yeah, so one reason why I really want to have you on the podcast is we are all different, but many people can relate to what you're doing and the people that you're helping with. So again, try to find your ideal advisor for your own circumstance, because we are all so different. And we have got our biggest audience is in the US, and you're probably aware that even if you move pretty much anywhere, unless you renounce your citizenship, which is another complete different story, you will always have some kind of like tax responsibility back home. And
that's
United
correct.
Kingdom, where we had our second largest audience, where I used to live for like 16 years, or at least change my bags there and pay tax. That meant that now, in the last 2 years, have been so substantial tax changes. So many of my friends are choosing to leave the country for multiple reasons. One of the biggest one is, again, the non-domicile rule, which meant that you, again, come back to this territorial tax, that the UK wants to tax you on your world income, which is a substantial change to the past regime. And I know too many millionaires and a couple of two billionaires who've left the country, which has got massive impact in terms of tax income, and not as much as tax as job opportunities, because I think entrepreneurs are creating opportunities for work globally. So again, given that this is not specifically targeted to you, the listeners' specific situation, we will share a few more case studies as we go along.
Sure.
So that was like the territorial tax, and like you as a person, high level, so we don't miss it. What is the difference then? Because you might or might not even take a salary or dividend from your company. Why is this different to your company? And now let's elaborate on some of the more common low tax company setups that you come across or advise.
So yeah, you bring up a good point there. Americans are there's basically from a personal tax standpoint, there's basically the United States and the rest of the world has a different situation, right?
Yes.
So I break it down. There's basically from a personal standpoint, I break it down into four different like tax systems. What I call tier one, which is zero tax. That would be like your Cayman Islands or BVI or Dubai or something like that. Basically, tax haven countries. So if you're a resident in Cayman Islands, you pay no income tax. Okay. Tier two countries are the residency-based territorial tax systems, like I mentioned before. Like Paraguay is one. There aren't many of those countries around, but there are a handful. Paraguay seems to be the more common one, just because they don't have a minimum, or they have a very nominal minimum stay requirement. Like there are other countries that have that territorial residency-based territorial tax system, but a lot of them have a minimum stay requirement, which is not very conducive to the nomadic lifestyle if you don't want to be in a country for half a year or more. Tier three countries, this is what almost every country in the world is. It's a residency-based worldwide tax system. So if you're a resident in that, like the UK, for example, if you're a resident in that country, you pay tax on worldwide income, or Germany, or most of the world is a residency-based worldwide tax system.
Yes.
Meaning you're a resident there, you pay tax on everything in the world. And then you've got the two outliers. You've got the United States and the tiny little country in northern Africa, Eritrea, as I'm sure you're probably aware, is a citizenship-based worldwide tax system. So Americans have a little bit different situation. We really won't speak to Eritreans because theirs is a little bit different, and you probably don't have any listeners from Eritrea anyway. So we'll focus on the majority of the listeners. I actually do have one Eritrean client, believe it or not.
Yeah. I need to fix that if we have missed a thread to have audience there as well.
Yeah. So Americans, you pay tax on worldwide. You never escape being a tax resident in the U.S., no matter where you live in the world, because it's a citizenship-based tax system. However, you do have a few loopholes. You got the foreign tax credit. If you are paying tax in that other country, you can take it as a tax credit back in the U.S. And then there's the foreign earned income exclusion, which gives you for last year, I don't know what it is for 2026 yet, but for last year, it's about 130,000 U.S. tax-free, plus a housing allowance. So the big loophole there, especially if you're married, then you basically take 260 plus a housing allowance. So you can get about 300,000 roughly tax-free. Even better if you had teenage kids, you can hire them and pay them 130,000, and then you get a bigger chunk. Funny story. I was at a conference speaking last year, and somebody asked me for any funny tax loopholes for Americans to pay zero tax. And I told them the number one best option The number one best option for high income Americans who want to live abroad and pay no tax
Costa Rica?
is nope, is
Nope.
to marry a non-American.
Ah.
Yeah. So Costa Rica, you bring up a good point. So
Yeah.
I have a couple of clients that have done this, but I'll pick on one of my clients. So I've got one of my clients. It's a couple. It's a guy. The guy is from the U.S. His wife is from Australia. Now, Australia is a little bit of a unique situation too, because you cannot just leave Australia and give up your tax residency without becoming a tax resident somewhere
Exactly.
else.
Yeah.
So, but when they got married, she moved to the US and got her green card. So she had that cut from Australia, the ATO, the Australian Tax
Yep.
Office. She had that line in the sand. She cut the ties with the ATO, became a US tax resident, and then they built a pretty sizable business. I mean, they're making net income is a bit over $1 million a year.
Yep.
And they came to me for advice, and I said, well, I mean, I can give you some options. Like, you guys have to decide what makes sense for you. What they ended up doing is she gave up her green card, and the two of them moved to Costa Rica. So back to the Costa Rica thing.
Yeah, exactly.
So
Yeah.
what they ended up doing is they started paying her a salary. I'm using rough numbers here, but
Yeah,
they
yeah, that's
started
fine.
paying her a salary of about $850,000 a year, and they paid him a salary of about 150. And
Yes.
then, and from the U.S. perspective, they were married filing separately, so they didn't file a tax return together.
Yeah,
So
got it.
he only filed on his 150 income, which, including the housing allowance, put him under
Yeah.
the foreign earned income
Yes.
exclusion limit.
Yeah.
And then she was now a tax resident, physical and tax resident in Costa Rica, but Costa Rica is a territorial tax system. So all of her income came from outside of Costa Rica. So all of her 850 is tax free.
Yeah.
So they basically earn $1 million completely tax free. So the big hack is marry a non-American. And the funny thing that happened to me at that conference is there was a girl sitting on the front row, and her friend sitting beside her yells at me in the conference. She goes, "Hey, my friend here has 2 passports and she's single." And so that was kind of a funny thing.
Yeah.
Yeah.
No, we've had another podcast guest like way back many years ago now, and he is putting many of his numbers online. So he's, without saying too much, John Lee Dumas, he making multi-million. He decided to move to Costa Rica for the weather, the family, the lifestyle, and yes, also substantial tax saving. So
I've
to
been on his show twice, by the way.
sorry.
I've been on his show
Oh
twice,
yeah,
by the way.
yeah, great, perfect. Yeah, good example.
I know, John.
Yeah, no, he's a great guy. What was my point here? So I just like to share the difficulty that might face many people in the audience. So tier three countries. So for example, I have been living outside my native country, which is actually Sweden, for most of the last few years. So in the last 20 years, I've only been living in Sweden 2 years on the paper as a tax resident. And that's actually pretty much the last 2 years when I've not been there. But I work for the government, so that means that I'm still living in Sweden, even if I'm not
Right,
living in Sweden. The
right.
irony here. So if, again, just take my case as an example. So for me to emigrate from Sweden, I need to show that I don't have any significant ties. So for example, do I have family? Do I have dependents? Do I have income, business, or a
Home.
residency? Exactly. And in
Yeah.
my case, I have a fairly solid story of showing that I've actually not been paying tax or living in Sweden for, yeah, most of the last 2 decades. So I got a solid case. My dependents are too old, so they're not that same thing there. My wife has been paying for the home for more than 10 years. We're not been living there. So I think I got a solid case for the Swedish tax authorities, which is quite draconian, to show that actually, thank you very much, Sweden. I will now most likely move to another country again. So without naming that country, I have a case, but I will most likely have to put in at least a half year in that next country to move my tax residency. And I'm just sharing this as a tax example story. And I need to stay away from Sweden for like for as long as I want to have this set up for at least half of the year for life or until I change my mind again. So take that case story, rip it apart or add to the story, because I think it's a quite common one if you're not from the US.
Yeah, actually, that's a really good one because I had a Swedish client a couple of years ago. I say a couple. It was probably like 4 or 5 years ago at this point, who came to me with a very big problem, a very, very big problem.
Tax problem.
Yeah, very big tax problem. So what he did, I think this is a good example and also a good lesson for listeners. What he did is he decided he wanted to leave Sweden. He wanted to go bounce around Southeast Asia for a few years. He had a company, doesn't matter what it is. He was making good money, really good money. And he wanted to go bounce around Southeast Asia for a while and be kind of nomad, like not have any one home base, just a couple of months in Thailand, a couple of months in, Vietnam, whatever. And what he did is, before he called me, so it's been, I think about 4 years ago, he contacted me, and he had been doing that for 10 years. So you can rewind like 14 years is when he left Sweden. And what he had done when he left is he said, I'm going to go find out what I need to do to leave Sweden to make sure I don't have to pay tax. Okay. Yeah. And he went on, I swear, I think it was Facebook. I'm pretty sure it was Facebook and some Facebook group or whatever. And he posed his question. I'm Swedish. I want to go live in Southeast Asia. This is what my company does. What should I do? Somebody had posted a response to his question in there. Hey, you should basically just be nomadic and register a company in Hong Kong and you don't have to pay tax anymore. So that's what he did. He just left Sweden, registered a Hong Kong company, moved his business over to the Hong Kong company. And for 10 years, he never paid tax. After 10 years, he decided he wanted to settle down and move back to Sweden. And when he moved back, he re-registered in the system. And they said, hey, where have you been the past 10 years? Because he did not exit the tax system in the correct way. So there's like a checklist of things you need to do to properly exit the tax system in Sweden. It depends on the country. Different countries have different rules. Sweden does have kind of a...
It's quite stringent, but yet clear rules. Yeah.
It is clear rules, but if you don't follow them, then they consider you a tax resident that whole time.
Yes.
If you don't do that checklist of things, then... So basically, long story short, he ended up owing, I forget the conversion to it's kroners, right, in Sweden.
But probably I'm guessing at least a few $100,000. I'm guessing now.
Yeah. It was well over $1 million in euros.
Oh, painful.
I remember the number in euros, but I don't remember whatever that converts to in kroners.
It's times 10 plus. Yeah.
Yeah. So it was well over €1 million that he owed to get back tax compliant. And so the thing, so you brought up the point earlier, everybody's situation is different. And it is, like people call me all the time. Like I get this all the time. Somebody will send me a WhatsApp message. Hey, my buddy Tom suggested I call you. I just have a couple of questions. Can you get on a 5-minute call? And I'll be like, no. I'm not going to do a 5-minute call with you because there's no such thing as a 5-minute call in this. Yes. It doesn't exist. People think their situation is simple because they don't even know the question to ask to know the right strategy because every detail matters. Your citizenship, your physical residency, your tax residency, your spouse, the country your spouse is from. Do you have kids? Yes. Are your kids in school? What's the nature of your business? Do you sell physical products or digital products? How do you get paid? Literally, how does the money get from the customer into your pocket? How do you physically get paid? Where are your customers located? Where do you physically do your work? Do you have employees? Do you have contractors? Do you have a center, like a center of operation for your, like there's, I don't know, 100 variables that can change everything. And sometimes I'll have people say, hey, you worked with my buddy Joe. I want the same setup as Joe. Can Can you do that for me? I'm like, no, because there's no way your situation's the same as Joe.
Yeah.
So every situation has to be different. And like the Swedish guy, basically the number one biggest mistake he made is being cheap. Like just being a cheapskate, because what he told me when we got on the call a couple of years ago, he admitted, he's like, look, I found a couple of guys online that could have helped me with it, but it was going to cost me like a couple of $1,000s in advice and structuring and all that stuff.
Yeah.
And I don't want to pay that kind of money. And he said, now I deeply, deeply, deeply regret it, because that saving whatever it was, let's say $2,000 or $3,000 or whatever the number, even if it was $50,000, it would have been significantly cheaper than what he ended up paying, right? Because if he would have just followed the right steps, he could have easily been tax-free during those 10 years if he would have done the correct steps. But the big mistake he made was not getting proper advice and just going on a Facebook group and saying, what do I do? Because in that Facebook group, you've got the people answering you, number one, very unlikely are professionals.
Yeah.
Number one. Number two, even if they are professionals, they still don't know the full details of your situation.
Yes.
And for them to know the full details of your situation, you can't really do that in a Facebook chat. And if you do, that's just stupid, because you're providing a lot of personal information that you should never be exposing in a public forum like that. I mean, that would be insane to put all that information out there, about your business and revenue and profit and family stuff, all that stuff. And then even if they do know what they're doing and they are a professional, or not a professional, even if they do know what they're doing and they advise you like them, they could also be wrong for their own situation. So, for example, this Swedish guy during that 10 years thought his situation was perfect because he didn't pay any tax during this 10-year window. If someone would have come to him during that 10-year window and say, what should I do? He could say, you know what would be perfect? Do exactly what I did. I don't pay any tax.
Yes.
Right? And then, you end up giving really bad advice because you yourself end up making a major mistake that you don't find out about till years later. Yeah. So, I mean, to me, that's a big mistake people make.
And also we haven't really bottomed at all in terms of where to put your company, but I've had another complexity to it as well. So again, based on YouTube advice, you can very easily now find out that you should do A, B, C. For example, you should have like one company in Delaware, and then you should have another company in Dubai, and with no real plan and no real structure and no real thinking about it at all. And I'm also doing a lot of cross-border business, which has got a complete different chapter, which we won't cover here today. But dive deeper into this misconceptions about like some of the absolutely most basic things that people put online, which does require additional advice. Some of the red line flags, please.
So, but you to your point, like you can go online. I mean, we have a YouTube channel too. I mean,
same.
We put out a ton of this stuff on YouTube about registering a company in X or Y or Z. But even if you're watching our YouTube channel, you can't watch that YouTube channel and directly attribute that to you, because it requires a consultative approach to make sure, like you said, a Delaware company or a Dubai company or a Estonian company or a Seychelles company works in your situation exactly for the thing you do. So there's a lot of advice given out there. I can hit on a lot of higher end topics. Again, you can't, even listening to this podcast, don't listen to me on this podcast and Fredrik here and be like, oh, well, Bobby and Fredrik said this, I'm going to do that. That's stupid.
Yeah, that's not the purpose.
Get a professional. The whole purpose of this or the YouTube channel or any of that is to give you ideas to further investigate and take that idea to your consultant or your tax lawyer or whoever you're
Yeah.
working with and say, hey, I heard about this. Do you think this works in my situation? That's the
Yes.
only purpose of this stuff.
Yeah, exactly.
You can't, you're going to burn yourself to the ground here if you don't like do it. You might get lucky, but you might not, right?
Yeah. Yeah.
So a lot of advice I see out there, I'm going to save the U.S. stuff for last,
Yeah.
and I'll explain why in a minute. Estonian companies are extremely common the past few years. Estonia came out
Yes.
with this e-residency program a few years ago, and the Estonian companies. I used to live in Estonia. I actually have a home base in Latvia now. I used to have an Estonian company for several years, but I actually had a physical location in Estonia, so it made sense in that case. So I've dealt with it. I was actually one of the first Estonian e-residents. I think I was
Yeah.
like number 83 or something like that when they first launched the program. I did it back when you had to go to the police station to get your picture taken in Tallinn. And they've done an amazing job of marketing Estonian companies and e-residency for the digital nomad audience.
I agree.
But I will say it is a terrible solution for 98% of all digital nomads.
Yeah.
It is a terrible, terrible option. It's not an unworkable option, but when I say it's terrible, there are in almost every case a better option than Estonia. Estonia, in my opinion, what works really well for Estonia, the type of business that works really well for Estonia is a physical goods business selling products in the European Union. So if you're doing e-commerce or
Yep.
brick and mortar, anything like that, I think an Estonian company, if you're physically moving goods into the European Union, an Estonian company works in that regard. And I've advised many clients who are doing e-commerce in Europe to do Estonian company. I had a call yesterday with a client who she's starting a chocolate company, and she's importing a lot of things into Europe because she's selling it all over Europe. It makes total sense in that case. So Estonia makes sense because they don't have traditionally they don't have a company tax. Basically, whatever you can retain earnings in your company tax deferred. You do pay tax when you pay yourself out as a dividend or as a salary. You're going to pay social tax and income tax, or you pay yourself as a dividend. You do pay it out. But the good thing is you can leave the money in the company tax deferred, and you don't have to pay tax. You have more capital to grow the business in that case. There are some optimization strategies you can use to get money out of the Estonian company tax-free, but it requires a much more complex structure, which would only make sense if you were a higher revenue business. And then the only other time I think Estonian companies make sense is if you do have a brick and mortar location. Like if, let's say you're doing a software company and you're going to open an office in Tallinn, then it makes a lot of sense to have an Estonian company. It is a good structure if you have that need. But all these people that have like a coaching business or something digital download or a SaaS business or, something like that where there's no physical goods being sold, registering in Estonia, but selling worldwide, it makes no sense. It's crazy. That's like, I could think off the top of my head at least 5 other structures that are way better than Estonia that's going to make your life easier, because Estonia, you got that monthly reporting that you have to do. If you're literally 5 days late, you start getting hit with fines and penalties. You're going to have to be VAT registered because you're going to have to charge all your EU clients anyway, VAT.
Exactly.
Whereas if you're selling a digital good from, a different non-EU structure, you may or may not have a VAT obligation for a digital product.
Exactly. Yeah. Yeah.
So
No, it's so super interesting. So coming back to you mentioned the US twist as well to tap out that subject. Did you have something to add to that one as well?
Well, I was going to go through a couple of other jurisdictions. I can be quicker if you want. So Dubai is another hot one that we get a lot of questions about. I think Dubai makes a lot of sense if you're doing business in the Middle East or maybe in Asia.
Yeah.
But it does not make sense unless that business happens in that region of the world, because you're going to have banking problems. Every single one of my clients that has had a Dubai company that has, like, they do business in, let's say, Europe or North America or South America, they've had banking problems. Now, I say banking problems, I don't mean like anybody stealing your money or anything like that. I'm saying you're having problems getting money in or out of that Dubai bank account because maybe your bank in Germany doesn't like frequent movement between Germany and Dubai. And so they start asking you a whole lot of questions every time you want to do a bank transfer, providing company documents and invoices and proof of payment. And like, you have to jump through a lot of hoops. I have had some clients who, like, I just had a client 2 weeks ago who has been doing business he's in the US, has a Nevada LLC, and he's been doing business with this company in Dubai for the past like 3 or 4 years. And all of a sudden, about a month ago, his bank, which I don't remember his bank, one of the big ones in the US, Wells Fargo or something like that, they just said, we can't do business with Dubai banks anymore. Like, I'm not saying it's Wells Fargo, but one of the big ones.
Yes.
We don't do business with Dubai banks anymore. So now he's got this client who can't even pay him. So, and I said, well, the problem is not necessarily on your side. It's actually on their side, because of that Dubai bank is not looked upon favorably by other big country banks. And I said, what needs to happen is that Dubai company needs to form another company, maybe a US company or something like that, where they can move money around so they can pay you from a US company. It's just friction like that makes it annoying to do business with Dubai as a Dubai company. And, I got clients all the time. They're like, oh, well, but my buddy has been using Dubai for 4 years with no problem. Well, that's what happens. Just like my client a couple weeks ago, he's been doing business for, I think, 3 or 4 years, no problem. Now, all of a sudden, boom, can't do it. That's generally my thought on Dubai. It makes sense if if you actually do business in the Middle East or Asia. Hong Kong and Singapore, I'm going to put them kind of in the same boat because they're very similar. A lot of people over the years, and let me say probably 8-10 years ago, I think they were good options because they were much more easy to deal with. But now you have to have a local director, a resident director for banking in Hong Kong and in Singapore. So a lot of people are like, I just want to register a Hong Kong company or a Sing company, but you have to have a local resident director even to do banking there. So you can register the company all day, but you can't open the bank account. There are services you can hire a director. They don't do anything other than put a name on the bank account, but you pay, a few $1,000 a year for the right to do that. So it just raises your cost of doing business. And then the other issue in both of those jurisdictions is, I've seen this happen a lot. Banks will close your accounts if you're not doing the majority of your business in Asia. I had a client who had a very bad situation in Hong Kong with this a couple of years ago. He had an e-commerce business selling on Amazon. He had a Hong Kong company, but Amazon US.
All right.
And the bank in Hong Kong said, we're closing your bank account because you don't do business. You don't actually do business here. I mean, he was buying some goods in Asia, but all of his revenue was coming from Amazon. And the bank said, we're closing your account. And they said, you've got, 30 days to, give us another bank account to move the money. Well, he had a Hong Kong company. He couldn't open a bank account anywhere else because of the territorial restriction. So he couldn't go to another Hong Kong bank because they're going to have the same issue. He couldn't go to another country because they don't open accounts for Hong Kong companies. And the bank would only send the funds to a bank account in the Hong Kong company's name.
Yeah, which makes sense. Yeah, from that point of view. Yeah, exactly. Yeah, it's a whole
So
know your
the
customer.
only
Yeah.
way the way he ended up solving it is he had to fly to Hong Kong. He hired a local lawyer. He ended up paying about $20,000 to a local U.S.
Yeah.
about $20,000 U.S. to a local lawyer who, I don't know what they did, bribe somebody. I don't know. But
Yeah.
they basically figured out how to force the bank to send that to another company. Basically, we ended up registering a Wyoming LLC for them
Yes.
in the same name as the Hong Kong company name.
Yeah.
And the lawyer basically kind of pushed the issue to send it to the Wyoming LLC.
Yeah, exactly. The names look the same. It's not the same, but it looks the same. You can argue it's the same, but it's not the same.
Yeah, yeah. So it was
Kind of.
some lawyer trickery and
Yeah.
maybe some small amount of money under the table in a
Yeah.
brown paper bag to the banker. I'm guessing. I don't know, but something like that.
Yeah.
So I think those jurisdictions are really good. I still think they're very good as long as you're doing business in Asia. I
Yeah.
think those are really good company structures, especially Singapore. I prefer Singapore slightly above Hong Kong because the banking sector I think is a little bit better in
Feels
Singapore.
safer, but then we come back to like the whole package again. It could be a lot harder to get a residency for yourself to hang around. So again, coming back to the beginning, like think about the whole story. What's the plan, like short term, long term? So for example, me, I am just to embarking on something substantially larger, which means it makes sense to review this now instead of
Yeah.
starting in the wrong location then trying to move it. So also something to think about your chapters in life, where we are and where you're going.
Yeah. So, I mean, we could go on there's a bunch of jurisdictions, like Panama is another one. But by the way, I'll say most for operational business, most of your offshore jurisdictions, like Panama and Belize and Nevis and Cook Islands and those, for operational business are terrible, terrible, terrible,
Yes.
terrible options. Panama is probably the worst. Um, or Belize, Panama or Belize, you can flip a coin. They're both awful jurisdictions. I recently had a client who had a Panama company and he'd been operating it for a few years. And he got a client in the US, a big client in the US. And the US client said, "We'd love to work with you, but we can't send money to Panama.
Yeah.
We just can't. It's against I don't know if it was their bank policy or their internal company policy, but they couldn't send money to Panama." So what do? Like you just can't you spend all this money setting up this structure without understanding the ripple effect and the implications of it because you're like, oh, I want Panama because it's private and zero tax.
Yeah.
But like, what good does that do if you can't generate revenue? You can't get paid, you know? So to make this full circle, I told you I'd save the U.S. for last. Um, I did I've been doing this like tax and company structure and asset protection consulting for over 20 years. And I spun a company off because what we found for the vast majority of people, US LLCs are the best for most people. And so I spun a company off, which is our now it's actually our bigger company.
Yeah.
It's our company BusinessAnywhere.io. And the whole reason we spun that off is because all of our clients needed US LLCs, regardless of nationality. So like US, and this is not like a sales pitch for me. Hey, do a US LLC. We literally did this for years, and in most every case, we
Yeah.
had to register a US LLC. And I just thought I'm tired of like referring this out to partners, so I started the company to do it. So we offer the registered agent service and company formation in all 50 states plus the territories
Yeah.
in the U.S. And it was a spinoff out of necessity is how it happened like that. So I don't promote U.S. because that's what we do. We do that because that's what's needed, if that makes sense.
Yeah, to me, it completely makes sense, which leads to a short follow-up question. So, again, a global citizen, not American, setting up a company in the US, keeping that clean so its operations there. He or she is not mainly living there to conduct operations, not a residence. What is the personal tax implication? I know the answer, but feel free to elaborate on that.
So that depends on the nature of the business. So an LLC, the default status of a single member LLC is what's called a disregarded entity for tax purposes.
Yeah.
Meaning, if you own 100% of that LLC, and let's just say that LLC makes $100,000, the LLC itself does not pay tax. It flows through to you as the individual, and you may or may not have a tax obligation based on the nature of the business itself.
Yes.
So if you have what's called ECI, or effectively connected income to a U.S. trade or business, then you would owe personally, you would owe tax in the U.S. And what ECI is do you physically do your work in the U.S.? Like, are you physically sitting in a chair within the territory of the country doing your work? Then yes, you have ECI, you're going to have a tax obligation. Do you have an office there with employees? And I say actual employees, like where you're withholding payroll tax, not contractors. If you have an actual office with employees, yes, you will have ECI. Do you have a physical location like a warehouse or a shop or something like that? Then yes, you're going to have ECI.
Yeah.
But for the digital nomad audience, that's extremely unusual because most of the digital nomad audience is some type of virtual business, right?
Yes.
Coaching, consulting, digital product downloads, software, digital information products, that type of thing. And if in that scenario, as long as you're not physically doing the majority of your work in the U.S., then no, you don't have a tax obligation in the U.S. You do have a filing obligation because the U.S. requires you to file a form called a 5472 and a pro forma 1120, which tells the IRS that that entity is more than 25% owned by a foreign owner.
Yeah.
But that's a once a year filing, unlike Estonia, which is 2 times a month, because you have the income tax filing and the VAT filing.
Yeah.
So Estonia is 2 a month versus the U.S. is 1 a year. So this is where I'm saying, like, for the Estonian, the people that go, the nomad people that register the Estonian companies thinking they just found the greatest thing since sliced bread, they don't understand their life could be infinitely easier if they just did a U.S. LLC.
Yeah.
In most cases.
Yeah. And like we said on previous podcasts as well, like there are low tax or no tax states in the US as well. So parking that. So that was the full circle here. So the conclusion that I hope that you take away with you is that it depends. But we hope that we together have opened up a few different boxes of opportunities. You can come and try the chocolate later. The podcast name is Invest in You. What does Invest in You to mean to Bobby?
Invest in you, to me, invest in you is your own personal education, which can be, I look at it like this. I want to invest in myself, and I can bypass a lot of my own internal struggles by, number one, spending time with people that are in life where I want to be. And that is what I call your spending time, your 5 of 5. You're going to be the average of the 5 people you spend the most time with. So I try to spend time with successful, driven people who have a good vision in life. And then the other way to do that is through reading books about people who are where they are in life, or seminars or that sort of thing. So I do a lot of that, investing in myself, listening to podcasts, reading books, spending time with high quality people. To me, that's the most important thing. And travel, because travel expands the mind and it makes the world a smaller place for me.
Yeah. So I personally would love to explore more in terms of your services and so on. You're not endorsed by myself, but you are endorsed by number of years you've actually been doing this. So with that said, what's the best place people can find you to follow up and to learn more?
So our main company now is BusinessAnywhere.io. So you can find us online there. That's the easy place. I mean, we have a contact form. You can schedule consultations with us. You can reach out to our team. We even have a chat window on there. And then I don't really promote this company because our main company now is Business Anywhere, but for the occasional person that does want a more involved structure and planning, I do that through my tax consulting practice, which is globalwealthprotection.com.
Perfect. Right, guys, you will find that, plus also Bobby's LinkedIn comment as well. So that is almost 1 hour. We got like 1 more minute to say something smart, and then you got 2 minutes to reload for your next call. So feel free to say something smart about what we discussed or anything else.
I'm a huge fan and a big believer in entrepreneurship. I do believe that entrepreneurs really drive pretty much all human progress. So I'm a big believer in that. And so probably the biggest advice, the 2 biggest pieces or best pieces of advice I've ever given or been given are, from an entrepreneurial perspective, is you only fail when you quit. Pretty self-explanatory. You know, if you give up, you're definitely going to fail. So keep hustling. And then the other one is more of a life thing, which it's one of my core philosophies is you only regret the things you don't do, not the things you do. So get out there and do stuff, you know, explore the world. And, you know, you never want to look back and think, I wish I would have, you know, started that business. I wish I would have taken that trip to Argentina. I wish I would have, I don't know, kissed the girl or whatever the thing is. You never want to have that regret. So do it.
So for me, I can only say, I wish we had more time. That's it. That's a wrap. Cheers.